After this up and down week, investors are rightly searching for solid ground in the markets. My next guest is bullish on stocks overall, saying the multiple on the S&P 500 has dropped to 20 from 22 back at the start of the year. And she has some specific ways to play the big global trends we're seeing, like China's political crackdown and the U.S. supply chain woes plaguing businesses. Joining me now is Nancy Priall. She's the Essex Investment Management co-CEO. Nancy, it's great to have you. Just top level, are there any headlines out there that would really, panic you out of stocks?
Well, I would hope nothing would actually panic us out of stocks because, as we know, over the long term, markets do go up as the economy grows. And as you mentioned, the valuations are not as high as they were at the beginning of the year. Having said that, though, there certainly are things that we are paying attention to and watching. First and foremost, of course, is the showdown that we're seeing in Washington over both the infrastructure bill, the reconciliation bill, and very, very importantly, the budget bill. We do not want to see a government shutdown. We do not like the brinksmanship over the debt ceiling. Our best guess, however, is that all of these will get resolved favorably for both the economy, the country, as well as for the markets. We're also watching China, but we think that Evergrande in itself is going to be somewhat isolated. We're somewhat more concerned about the move of China back to a more planned economy.
Yeah.
But what that creates for us is the opportunity to benefit from the reshoring in the United States.
Yeah, and I want to get to some plays there. I think it's actually a really interesting thesis that you have. But if we could just dwell on this for a moment, it is ironic that if everybody wants to be structurally long stocks, but their price keeps going up, it just becomes more and more expensive to get in. Now, again, we can argue about the multiples and earnings, and this is how things are supposed to work. But I guess what I'm saying is, on some level, should people be embracing a correction, the down days that we might have? It's like we're chasing stocks in an upward line.
We think you need to be prudent here, which is why we call it a Goldilocks economy and a Goldilocks market. You want to find companies that have excellent growth prospects, particularly in industries that are disrupting the way that we've done business, in industries that are capitalizing on all of the phenomenal research and development that is going on in this country. But you don't want to pay too much for that growth. And so we want to find companies that are beating on both the top and the bottom line, companies where that growth rate can continue for a number of years, where the competitive situation is important. For investors, the other thing that I think it's really important to keep in mind is a long-term time horizon.
Yeah.
The market reacts to all of the news of the day.
Yeah.
And what might be bad news today could be good news tomorrow. But as investors, if you pick your spots carefully and stay patient, that is how you compound your returns over the long term.
We've been teasing people with some of the names that you do like on the screen here. I'm going to rattle off some of them which are in the healthcare space, some smaller companies like ViewRay, Veracyte, Castle Bioscience, Avid Bioscience. Then we have the disruptive tech names like an Upwork. We've had Hayden Brown on the show a number of times. You like Revolve, an e-commerce fashion play. And then I want to get to this theme you mentioned as it regards what's going on with China and the supply chain. The reshoring of manufacturing is a big one for you. And actually, a company we haven't talked about in a while, 3D Systems, ticker DDD, is one of the beneficiaries, you think. So is AdvanSix. Tell me how much upside potential you think these names have.
So we think there's tremendous potential in both of those names. They're a little bit different. 3D Systems, as you mentioned, is a way to benefit from what we used to call 3D printing, what's now called additive manufacturing. This is a trend that was probably not quite ready for prime time when these companies first came public, and there are a couple of pure plays in the industry, but we think now is ready for prime time.